Hey everyone, today we are diving into a topic that might seem a bit overwhelming at first, crypto taxes in the UK. But don't worry, we are breaking it all down in simple, beginner-friendly terms. By the end of this video, you will understand the basics and feel more confident about how to handle your crypto taxes in 2025. Let's get started. So let's start off with what taxes actually apply to cryptocurrencies. Well, in the UK you generally need to think about two main types: capital gains tax and income tax. The capital gains tax applies when you sell or trade your crypto for a profit on the portion that exceeds the tax-free allowance. The specific tax rate depends on the total amount of your capital gains. The tax rate is either 10% for basic rate taxpayers or 20% for higher rate taxpayers. The income tax comes into play if you earn crypto, say from staking, mining or airdrops. The specific tax rate depends on your overall annual income. Now let's talk about when you will need to pay taxes. There are a few common situations where crypto becomes taxable, like the following: selling crypto for pounds, trading one cryptocurrency for another, spending your crypto on goods or services, gifting cryptocurrencies except to your spouse, earning crypto, for example staking, mining and airdrops, and cryptocurrencies received from hard forks. Before we dive any deeper, let's quickly talk about personal allowances, because it plays a big role in how much tax you actually need to pay. In the UK, everyone gets personal allowance, which is the amount of profits you can make before you have to pay any capital gains tax, and for 2025 this allowance is £6,000. So if your total profits from crypto don't exceed that amount, you won't owe any tax on that gains. But remember, if you earn more than that, you will only have to pay taxes if the amount is above £12,570. Let's quickly cover the cost basis. It's a key concept that helps you determine the amount of tax you owe when selling your crypto. In the UK, here are a few specific rules you need to know about: the same day rule, the bed and breakfast rule, and the section 104 rule. The same day rule and the bed and breakfast rule are both designed to prevent tax avoidance by ensuring that short-term crypto transactions are taxed fairly. The same day rule ensures that if you buy and sell the same cryptocurrency on the same day, the gains and losses are calculated based on the costs of the crypto bought and sold within that day. This prevents taxpayers from manipulating the tax liability by exploiting price fluctuations within a single day. For example, you buy one BTC at 10 AM for £30,000 and later the same day you sell this BTC at 2 PM for £32,000. In this case, the cost basis for the sale is the purchase price on the same day, the £30,000. So your taxable gain is £32,000 minus £30,000 equals £2,000 in profit. If you bought multiple amounts of Bitcoin throughout the day at different prices, the average acquisition price for the day is used as cost basis. The bed and breakfast rule prevents taxpayers from selling crypto to realize a loss for tax benefits and then quickly repurchasing the same crypto to retain ownership. This rule states that if you sell a crypto asset and then buy it back within 30 days, the cost basis for calculating the tax is the repurchase price within that 30 days window, not the original price. For example, you sell one Ethereum on the 1st of October for £1,200, which you originally bought for £2,000, which means you made a loss of £800. On the 15th of October, within a 30 days window, you buy one Ethereum again for £1,500. In this case, the bed and breakfast rule applies and the cost basis for calculating your future gains is now £1,500, the price of your repurchase, not the original £2,000. You can no longer claim the £800 loss immediately. The idea is to prevent someone from selling to log a loss for tax purposes, only to quickly rebuy the same asset. If neither of the previous rules apply, then section 104 rule kicks in. This means the cost basis is the average cost of all tokens you own. The HMRC has provided guidelines on how individuals should report their crypto transactions on tax returns. Any cryptocurrency investor who has earned over £1,000 in crypto income or realized more than £6,000 in crypto capital gains is required to file a self-assessment tax return with the HMRC. Okay, you've made some gains or earned some crypto. Here's how to report to the HMRC. You can use the online government gateway service for the capital gains tax, the form SA-108, and for the income tax, the form SA-100. You can also use the government gateway to submit your self-assessment tax return online. For reporting capital gains and losses, you will need to fill out the supplementary form SA-108. If you've earned some crypto income like mining and staking, you can report this on the pages using the SA-100 form. And a pro tip, make sure you are keeping detailed records of all your transactions. This will make filing a lot easier when the tax season rolls around. That includes dates, amounts and types of crypto, and even wallet addresses. The HMRC can ask you for these records up to 5 years after your tax return, so be sure to hold on to them. Here's some good news. Not every crypto activity is taxable. You don't need to pay tax on certain events, like the following: holding your crypto, gifting crypto to your spouse, transferring crypto between your own wallets, donating crypto to a registered charity. These events don't trigger any tax, but make sure you are following the rules closely. Now let's talk about a few strategies you can use to reduce your crypto tax liabilities. These can really help you save some money. Utilizing losses for tax benefits, carrying forward losses, deducting transaction costs, claim lost and stolen crypto, and annual exemptions. If some of your crypto assets have lost in value, you can sell them to realize a loss. This is called harvesting losses, and it can be used to offset gains from other transactions, reducing the overall tax burden. If your losses are higher than your gains in a given year, you can carry forward those losses to offset future gains. This is great if you accept bigger profits in the year ahead. The good news is there's no limit on how much loss you can use to offset your capital gains. Don't forget to factor in transaction fees when you calculate your gains or losses. These fees can be deducted from the sales price, which could help you reduce your taxable gains. If you have lost access to your crypto due to lost private keys or theft, you might be able to claim a capital gain loss. To do this, you will first need to file a value claim. If approved, you can then claim your lost crypto as capital loss, but make sure you have solid evidence. Finally, remember capital gains tax-free allowance in 2025 is £6,000 per year, and you also have your personal income tax-free allowance up to £12,570 per year. And here's another pro tip: don't forget you can also take advantage of your spouse's tax allowance. By gifting some crypto to your spouse, you can effectively use both your capital gains tax-free allowance and your personal income tax-free allowance. This can help reduce your overall tax liability, especially if your spouse hasn't used their own allowances yet. And one last thing you don't want to miss: the tax deadline. The UK tax year for crypto and everything else runs from the 6th of April to the 5th of April of the following year. For the current tax year, you need to file your online self-assessment tax return by midnight on January 31st, 2025. Missing this deadline can result in penalties, so make sure you mark this date in your calendar and get your crypto taxes sorted on time. And that's a wrap. I hope this video helped to clear up the basics of crypto taxes in the UK for 2025. Staying on top of your crypto taxes might take a bit of effort, but it's definitely worth it to avoid any surprises from the HMRC. We've left the link to the comprehensive UK tax guides and some other useful resources in the description below, so make sure to check them out. If you found this video useful, don't forget to hit that subscribe button and give us a thumbs up for more crypto content. Thanks for watching, and I will see you next time.